This is the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial endowment expert, Harold Siegel. We're taping our show on June the 2nd, 2017. Our time right now is 8:38 Mountain. Our radio show runs on 6:30 CHED, Sunday afternoon at 3. The shows are archived on Harold's website, rarecoloreddiamonds.com, streaming there 24/7. Podcast through iTunes. Type in The World Financial Report on Radio. You will find us there. We're portable. We go on any of your devices. If you would like to speak with Harold Siegel, go to our website, rarecoloreddiamonds.com, and you can also call free of charge 1-800-432-1022. 1-800-432-1022. Our featured diamond of the week, and we'll talk about diamonds in the second half of the show, is a .51 carat radiant cut fancy intense orange. Orange, one of my favorite colors in the diamond world, along with greens, and this is a very vibrant color. See it online, rarecoloreddiamonds.com, featured diamond of the week. We'll talk about diamonds coming up a little later on. As we tape today's program, big news yesterday in the United States. Donald Trump, the President of the United States, pulling out of the Paris Accord. And obviously, people in the United States, around the world, really, really unhappy. Job report came out this morning in the United States. They added 135,000 jobs. They had been expected to add about 185,000. The unemployment rate ticked down to 4.3%, and that was a 16-year low. 95 million people, 95 million not in the labor force. A stunning number, to say the least. And Harold, that's where I think at times people forget there are a lot of people who would like to be working but just cannot find a job that suits them or will meet the pay that they need to get by financially. And some of the jobs that they are adding in the States are sort of lower-end jobs that you really can't get by on a month-to-month basis if you have a family. So there is a hidden number there that a lot of people need to take a look at, and that is the labor force participation number, 95 million not in the labor force. And give us a rundown, Harold, of what happened in the financial world this week.
I sure will, but that's an astounding number. You know, that just shows you that how bogus the unemployment numbers really are. I mean, saying that we have 4.3 unemployment in the States, but almost 100 million people not working, doesn't make any sense. We know that there's been issues with jobs over the last few years, and it was primarily to do with President Obama and everything that he was trying to do. So at this point, we're looking that the job numbers really are fictitious because over almost 100 million people just aren't working. All in all, this week the markets were trading in a bit of a range, but gold did rally a bit. Gold's up $10 as we're trading on Friday and taping the show. We're trading right now at $12.76 in gold. The important number for gold is $13.80. That's where the major resistance is, and once we break that $13.80 level, then we should see a path to the $1,900 to $2,000 level in gold. Now, it's a crazy time in the markets because, number one, we're still looking at a strong U.S. dollar. The relationship between the U.S. dollar and the Canadian dollar has remained almost the same. The U.S. dollar is stronger than the Canadian at this point and should continue to do so, even though the U.S. dollar has fallen against the euro over the last couple months. So the fact is that we need to see, first of all, some rate hikes in the United States, and I think we're going to see at least 2 to possibly 3 more this year, which will continue to strengthen the U.S. dollar, even though a lot of this is already built into the currency markets. It's really the uncertainty of the Trump government, which is why the currency markets are trading in the way that they are. Everything that Donald Trump does is going to be looked at by, obviously, 2 different parties, one that are bullish on Trump and the ones that aren't. And the fact is that with the Paris Accord yesterday, or on Thursday, the fact is there's a lot of people in the U.S. that are upset about it. There's a lot of people around the world that are upset about it. However, if you look at the numbers, he's really not making the wrong move here. So I know he's not popular at this point here. I know he's a bully and he's not a politician, so he stumbles and does that type of thing. But all in all, he is still a businessman that understands, what a good deal is, and evidently that Paris Accord was not a good deal for the United States. So we'll have to see what continues to happen there, but almost everything that happens is showing up in the markets at this point. Whether the U.S. dollar strengthens or weakens on a daily basis, the trend for the U.S. dollars is still extremely high. We do anticipate that the U.S. dollar will be the strongest currency, and we anticipate that the U.S. dollar will rally very strong for the next several years. So that's a trend that we really want to take advantage of. If the U.S. dollar is going to continue to strengthen, we want to be in the U.S. dollar. And realizing that most of our investments in Canada are in Canadian dollars, and the Canadian dollar will continue to fall, we need to get out of some Canadian dollars and get something diversified into the U.S. marketplace. And we can certainly help you with that. We have programs available that will allow you to convert your Canadian dollars to American and get involved in private deals in the U.S. that could literally change your financial life. But at this particular point, again, we're concentrating on gold because gold could rally very strong even though the U.S. dollar is strong, and normally that wouldn't happen. But the fact there are so many geopolitical situations going on at this point that we really have to look that gold could rally very strong again. So we don't want to be naked in that market. Listen, you don't want to leverage gold, you don't want to finance gold, you want to own your gold outright, and you want to be able to buy it at the best prices. The fact is that we've been out of the gold market for the last 4 years, but we did ride the biggest bull market in history from 1999-2000 all the way up to 2011, when gold went from 250 all the way up to 1900. The market came crashing back down to 1100 because it was manipulated at that particular point in 2011, and the market has really not done that much over the past 4 to 6 years. Now, with Trump in office, with what's happening geopolitically, with ISIS, and with all the bad financial situations going on in Europe, we do believe that we need to be strong in the U.S. dollar, and we need to be strong in gold, because it's possible, and it's happened once before, that gold and the U.S. dollar can be strong at the same time. So we're recommending at this point here to relook at the gold market, to own it physically. Now, we have a gold program available, but at this particular point, the gold bars are kilos, which is 2.2 pounds of solid gold, and we do have an amazing gold program that's just starting. So if you want information on gold and how to trade gold and how to own gold, by all means give me a call next week and I'll explain everything to you. Or if you want us to email information to you on our new gold program, by all means do so. Now, gold is traded in U.S. dollars, so having gold is an investment in the U.S. dollar. So the fact is that we want to continue to own gold, and we want to start to look at it very strongly because of all the situations happening at this point. Again, I know it's almost contradictory, but the fact is that the U.S. dollar is still the currency to own, and we do believe, as Trump continues to find his footing, that he will end up doing a good job. So again, at this point, we do anticipate a strong gold market. Silver is lagging way behind at this point. We're at $12.75 in gold, $10 on the day, and we're at $7.49 in silver, and we're up 12 cents on the day. Also, oil has been volatile lately. Crude oil is down 95 cents today. It's actually trading down as low as 47.41. The Canadian dollar's at 1.35, meaning that it would cost you 1,350 Canadian to buy 1,000 American. We believe at the height it'll cost you 2,000 Canadian to buy 1,000 American. That's how much we believe that the U.S. dollar will strengthen and the Canadian dollar will fall. We have private programs that will allow our Canadian clients to invest in U.S.-based investments that are private to my company that most of my clients are investing in at this point. So, again, at this time, these are confusing times in the market. There's not a lot of opportunity for you to make money nowadays. The stock markets are very volatile and not the place to put most of your money. In fact, 90% of people that trade stocks lose their money. Same situation with trading commodities on your own. If you're not well versed in trading commodities, 90 to 95% of people that trade them lose their money. So obviously you don't want to go into those type of situations without the proper research and without the proper advice. And again, if those are areas that you are trading in at this point and you want a second opinion, by all means just give me a call and I'll spend as much time with you as you need to try to analyze what your situation is and make recommendations as to what you can do investment-wise moving forward. So, again, all at this point, Randy, is with everything happening in the world with ISIS and the attacks all over the world and, uncertainty in the financial markets, it's time to get back into gold. And we have a phenomenal program that will help our clients buy physical gold at prices that nobody else could give to you.
Speak with Harold, 1-800-432-1022. 1-800-432-1022. The website, rarecoloreddiamonds.com. Our featured diamond of the week is a 0.51 carat radiant cut fancy intense orange. See it online, featured diamond at rarecoloreddiamonds.com. One of the stories that we've been following for quite some time is the retail environment in Canada and the United States. We saw what happened with Target coming to Canada. They came in, and it was a quick reversal. They got out. Michael Kors said Wednesday it will shut down at least 100 stores following dismal quarterly sales results, and the company said it will close between 100 to 125 full-price stores to improve profitability. Now, Payless Shoe Source could close another 408 stores, in addition to 400 stores it shut down 2 months ago after filing for bankruptcy protection. The company is seeking to immediately close 112 locations and potentially shut down another 296 if it can't get cheaper rent from those stores. Also, and this is a big number, and I saw it published and quoted in many different news items, about a quarter of the U.S. malls that are out there, 25%, will most likely be closed within the next 5 years, according to a new prediction by Credit Suisse. In a research note published Tuesday, the bank estimated that 25% of the nation's 1,100 shopping malls, or roughly 220 to 275 shopping centers, would shut down by 2022. Credit Suisse cited mass store closings, the rise of e-commerce, and the growing popularity of off-price chains, which tend to be located outside shopping malls, as a reason for the potential mall closings. About 3,600 store closings have been announced in the United States this year. Credit Suisse estimates that about 8,640 stores will ultimately close by December. The firm also estimates that e-commerce will grow from 17% of apparel sales today to 37% by 2030. One of the interesting stories that I've been reading and following as well, haven't put it in our free weekly newsletter. If you would like to get our free weekly newsletter, connect with Harold. We send out our free weekly newsletter via email. You can go through it in 5 minutes, be completely up to date, or you can spend hours if you want. Call Harold, get our newsletter, 1-800-432-1022, the website, rarecoloreddiamonds.com. And one of the stories that I have not put in is Amazon. They are actually starting to build little centers where you can go pick up packages. And they're actually looking at using drones for deliveries as well. So the future is going to be very, very interesting. Now, Harold, there were two stories that were very important this week in our newsletter. The IMF expressed concern over hotspots in Toronto and Vancouver housing markets. The International Monetary Fund says concerns over Canada's housing market, they are valid, but that doesn't necessarily mean they are a systemic problem that need urgent attention. The agency revealed its annual review of Canada's economy on Wednesday, and on the whole, the outlook for Canada's economy is positive, with an expectation of 2.5% growth this year and 1.8% growth after that. But despite the generally sunny forecast, the group doesn't single out any continuing concerns about the Canadian housing market. It actually does, and suggests policymakers need to stay focused on that file. They are very concerned about the housing market in Vancouver and Toronto. One of the famous hedge fund traders, his name is Carson Block. He runs a firm called Muddy Waters, and what he is famous for is finding companies where the books are cooked, and he will go in and he will make a short. And usually, pretty much 99% of the time, is very, very successful. Well, Carson Block of Muddy Waters says that due to what's happening in Canada, he is very concerned. He said in a phone interview from San Francisco, he said, recent sell-offs in Home Capital Group and Element Fleet Management Corp. show that investors in Canadian assets are getting nervous about soaring real estate prices and household debt. I'm starting to believe that there are some real problems with Canada. And he goes on to add, the conditions seem to exist there that some pain is going to be inflicted on the markets. And he goes on to say that in Canada, it's the hottest market in the world for short sellers. If not, it could be. Canada's real estate market has been pushed by foreign money to a kind of buying frenzy. The U.S. experienced a decade ago, Block said in this phone interview. He recalled a visit to Toronto in 2011 in which he was stunned to see posters through the financial district encouraging people to borrow aggressively for consumption. I was thinking, my God, didn't we just go through this in the United States? Meanwhile, there's a prevailing sense in Canada that the situation is different, and the collapse experienced in the United States in 2008 couldn't happen here, he said. Every time you hear that, you know that it can happen, and it's going to. So it's interesting to see Carson Block of Muddy Waters being concerned about Canada, being concerned about the real estate market. And Harold, here's hoping that we have an orderly decline in the real estate market when it does start to go. And one of the big catches in all of this, if interest rates stay low, I think more than likely real estate stays up. But if they start raising interest rates here in Canada at some point, that's when we could really start to feel the pain. And we have about 5 minutes left in our segment here.
Well, that's very true. I think the chances of raising interest rates in Canada at this point here is pretty slim, but the only way I see them raising interest rates if inflation starts to pick up, and I just don't see that at this point. However, what you will see is when the general public does get involved in these type of bubble type of investments like real estate and stocks, and these bubbles are at the end and they're about to burst, that's when you start to see massive selling in panic almost, and that's when, the prices really tumble. So I hope it doesn't happen that way, because again, it would be devastating for the economy up there. But again, we hope that if it does sell off, that it's in an orderly fashion. But the prices have gone up so substantially. I mean, there was months that the price of real estate in Toronto was going up by 30%. So, that just doesn't happen in the real estate market normally. So, again, it is a major concern. Getting back one more time to the unemployment situation that we talked about before and all these store closings. If we're going to get all these stores that are going out of business, and in the States, it's massive. You're seeing massive companies shut all their retail outlets. That means more and more people are going to be unemployed. So, that's something that we definitely see happening now and moving forward into the new, over the next couple of years. But again, I do see a massive situation in the U.S. as far as unemployment, unless by some miracle, Donald Trump is able to produce more jobs. But when when you're closing 2, 3, 500, 1,000 stores, where are all those people going to? There's just not enough jobs around. So again, we see a lot of issues coming in the economies. That's why we need to diversify into gold, into U.S. dollars, into other currency situations, so we know at this point that we have protection against, the onslaught of what could happen. It's actually quite frightening to think that all these things are happening and most people at this point don't realize what to do. We can certainly help you with that.
If you want to speak with Harold Siegel, he'll be happy to talk to you anytime. The call is free and obviously confidential. 1-800-432-1022. The website, rarecoloreddiamonds.com, 1-800-432-1022. And one thing that people are concerned about as well is robots, and robots replacing people in manufacturing and so many other areas of our work life. And what will that mean to the average everyday person? Are we all going to be sitting at home getting a check from the government as the robots do the work? I know it sounds crazy, but at this point in time, I'm very curious to see over the next 20, 25, 30 years where things go. One of the other stories that came out late yesterday, and we've said this for a long time, Illinois, the state of Illinois, ironic that Barack Obama, the former president of the United States, from there, that's his state, along with Hawaii, they were downgraded. S&P, Moody's downgraded Illinois to near junk. Lowest ever for a U.S. state. Illinois had its bond rating downgraded to one step above junk, the lowest ranking on record for a U.S. state, as the longest-running political stalemate over the budget shows no sign of ending. They can't get a budget going, and it has left them with a record $14.5 billion of unpaid bills. Can you imagine if you were owed money by this Illinois government, state government, and you're waiting to get paid? You're talking about average everyday people not getting paid, but a stunning reversal here. Obviously, you have them at almost near junk and owing close to $15 billion. One of the stories, too, that caught our attention this week, global retirement time bomb. And I would get our free weekly newsletter for that alone. It's so imperative that you learn about investing, and obviously Harold will be happy to help you do that. Today, more than ever, how are we going to retire if we do not put some money aside? And they're talking about people working to age 70, and there are huge amounts of money that the governments have not put away. In fact, they're talking about $400 trillion by the year 2050 that will not be accounted for when it comes to future generations and the money that will be needed for their pensions. Government not putting away enough money, the average everyday person not putting away enough money. It was a major story during the week. It was called Global Retirement Time Bomb. Speak with Harold, get it, and we'll be happy to send it out to you. 1-800-432-1022, the website rarecoloreddiamonds.com. We're going to come back and talk about diamonds. There was an auction in Hong Kong during the week, and we'll talk about that and more. As the World Financial Report on Radio with Harold Siegel and me, Randy Marshall, continues right after this. Welcome back to the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial and diamond expert, Harold Siegel. We're taping our show on June the 2nd, 2017. Our time is 9:03 Mountain. Radio show runs 6:30 CHED in Edmonton, Sunday afternoon at 3. If you ever miss a show, we have a podcast. Through iTunes, type in The World Financial Report on Radio. You'll find us there. You can also find us streaming 24/7 on Harold's website, rarecoloreddiamonds.com. rarecoloreddiamonds.com. This week, our featured diamond, and it is an absolutely gorgeous diamond that's vivid in color. It's just a beauty. It's a .51 carat radiant cut, fancy, intense orange. See it online. We have a picture online at rarecoloreddiamonds.com. rarecoloreddiamonds.com. And we do have auction results. We'll be happy to send them out to you. Christie's Hong Kong Magnificent Jewel Sale on May 30th, 2017 at the Convention Hall in Hong Kong, China. We have auction results, and we can give you one that, and this is in our world, the rare-colored diamond world. There was a diamond that was picked up by luxury brand Harry Winston. Nelia Hayek, the jeweler's CEO, bought a rectangular cut 3.98 carat fancy vivid blue VVS2 diamond for $8.9 million or $2.2 million per carat. The price of the stone, which was mounted in a ring along with a cushion and triangular-shaped pink diamonds, fell within the pre-estimate of about $8.3 million. I'm so happy to have been able to secure this rare blue diamond, which will take a prominent place in our important collection of top gems, according to Hayek. So yet another big diamond goes at auction, another beautiful blue. And Harold, between the pinks and the blues, they have been doing very, very well in 2017.
You bet. The blues have just gone absolutely crazy. The biggest price move I've ever seen has come from blue diamonds. Not only in diamonds, but in anything that we've ever traded before. So the fact is that blue diamonds, vivid blues, have gone from 2005 to 2016. They went from 200,000 a carat to almost 5 million a carat. Now, those were for the big, important, vivid blue diamonds, but again, the returns on these have been sensational. You know, we've talked many times about, Shirley Temple's diamond that was bought in 1940. It was a deep blue, bought for $7,100, sold last year for $25 million. Those are the type of returns that you can see when you can, for those that can afford to buy those very important diamonds. So the fact is that these are longer-term investments. You put them away for 10, 20, 30 years, and the price of these assets go up tremendously. For retirement, they do much better than mutual funds or retirement savings plans or anything like that. So the fact is that when you get a rare diamond, and depending on what you have to spend, obviously most people cannot buy, 10, 20, $30 million diamonds. But they can afford $10, $20, and $50,000 diamonds. And those type of diamonds go up substantially also. It doesn't matter whether a diamond's a multi-million-dollar diamond that doubles or triples, or a $20,000 diamond that doubles or triples. You're still doubling or tripling your money no matter what. So the fact is that rare colored diamonds can give you that type of return, but it's not a short-term investment. You don't buy them for a couple of years and sell them and expect to make, those type of substantial returns. What I've done over my career is rather than buy stocks or mutual funds for my grandchildren or children growing up, I put diamonds away for the future. I think it's much safer. The potential for making money is much stronger, and the fact that these assets never, ever decline in value, on top of the fact that they're also priced in U.S. dollars or any other currency. We could literally sell diamonds in Europe when we're set up to do that if the euro or the British pound were the currencies that we wanted to collect. So at this particular point, one of the best investments you can make, especially to take advantage of the currency markets, are rare colored diamonds. Now, the featured diamond is one of the rarest diamonds you'll ever see. First of all, orange diamonds are extremely rare. Orange diamonds turn orange because of nitrogen seeping into the ground that would turn a white diamond to orange or to yellow. It's nitrogen that turns a diamond orange or yellow. It's boron that turns a diamond blue. It's uranium that turns a diamond green. And nobody really knows what turns a diamond red or pink. That's still a mystery. So the bottom line is that investment-wise, rare colored diamonds give you safety. They give you price support because, again, in any investment, number one, you want to make certain that that investment is safe and you're not going to lose your money unless you're just totally into speculating. Number two, you want to make certain that that investment not only is stable but has the potential to go up in value, because that's why we invest our money. We obviously want to make a return on our invested dollars. So I feel that rare colored diamonds will definitely give us that opportunity. The featured diamond this week is one of the rarest diamonds you'll ever see. It's only just slightly over half a carat, but the fact is that most people have never ever seen an orange diamond, nor will they, because they're so few and far between. So a diamond like that, especially if it's put into a piece of jewelry, can then take on a life of its own, as these diamonds just can go up substantially in price, especially when other factors or other segments of the economy is not doing as well. So again, featured diamond this week, ridiculously rare, a true investment diamond that will definitely go up in value over time and will never decline in value because you could never replace that diamond. So we're extremely excited about what's happening lately in the rare colored diamond market. What's happened with blue diamonds over the last 10 to 12 years has been sensational, and that will continue to happen. The odd time that a blue diamond will ever come up for sale, you'll see that diamond sell at auction for basically record prices. The next diamond class to make these gigantic moves are pink diamonds. The Argyle mine in Western Australia produces 95% of the pink diamonds in the world. Again, as I mentioned earlier, nobody knows truthfully what turns a diamond pink or red, and the Argyle mine is famous for their pink and red diamonds. Maybe once every 3 or 4 or 5 years a red diamond will become available. They're the rarest of all diamonds, but pink diamonds, it's a very small number. It's not like something that could be mass marketed. You're talking that only 50 to 55 diamonds of over a half a carat come out of the Argyle mine every year. And those are sold at something that is called the Argyle Pink Diamond Tender, and that's the biggest diamond event of the year. Now, the fact is that we're only 3 years or less away from the Argyle mine closing. It's been in operation since 1986. It was one of the biggest producing diamond mines in the world, producing 30 million carats of diamonds a year, but those were normally low-grade industrial white diamonds that were used to cut other diamonds. The true treasure of the Argyle mine is found in these Argyle pinks, and if you take the whole year's production, it wouldn't even fill a champagne glass. That's how small this market is. Now, the Argyle mine that produces all these diamonds is going to close down. They're just not producing anymore, and the mine is not profitable. So now, if you're one of the very few that owns these Argyle pink diamonds, I think your payday is coming in 3 to 5 years. I believe that the prices will increase so substantially in those pink diamonds that could literally turn out to be one of the best investments that you've ever made. Now, we've seen it happen in blues, and now we're seeing it happen in pinks, and it's also going to happen in orange and green diamonds. We believe that that is the next trend coming forward. So, again, at this point, Randy, we just believe that the rare colored diamond market is on fire, and the more people get less enamored with the stock and commodity markets because they are so risky, to look at an investment like a rare colored diamond that will not fall in value, over the long term will increase more than almost any other asset that you bought, and is portable private wealth, can be sold in other currencies. It's just a perfect investment at this time.
See our website, rarecoloreddiamonds.com. It's like going to a museum online, and there you have nature's art, billions of years in the making. Yes, Harold has vaults, extensive diamonds within those vaults, pictures on rarecoloreddiamonds.com. Featured diamond of the week is a 0.51 carat radiant cut, fancy Intensio orange. And speaking of oranges, it was about 3 years ago that an orange diamond sold for $36 million at Christie's. The largest fancy vivid orange diamond known to exist sold for 32.6 million Swiss francs, $36 million US at the time, at Christie's International in Geneva. The 14.82 carat pear-shaped stone's price included fees of about $2.4 million per carat, according to the auction house at the sale about 3 years ago. This was a per carat record for any colored diamond at a public sale at the time. The gem also set a record for an orange type diamond, according to Christie's. And they went on to say there are buyers out there of these rare, great rarities, and there are moments that like this that come along that offer obviously a person the exclusive availability to pick up a rare diamond. And pinks and blues have done very well at auction. Orange, yes, that's another color that is really starting to become very, very popular. The owner, the anonymous owner, had the diamond for at least 30 years. And that's a story that we wanted to bring back to remind you how much orange diamonds are coveted. About 3 years ago, an orange diamond selling for $36 million at Christie's in Geneva, and we have some pictures to go along with it. If you are new, or maybe you do have a diamond portfolio, there was an article that came out a little while ago we want to remind you of, and that is Wall Street Journal did a story, Demand Soars for Colored Diamonds. Investors seeking higher returns have moved into an area once the preserve of wealthy collectors. And they go in that article and talk about rare colored diamonds. It is in our free weekly newsletter. We'll be happy to send it out to you along with auction results from Christie's Hong Kong Magnificent Jewel Sale, which took place earlier in the week. But it all really started in August of 2005. Harold had the idea to start a website called rarecoloreddiamonds.com. He wrote an article called Naturally Fancy Colored Diamonds, the Best Kept Secret. This was the beginning of August of 2005. And in this 12-year period of time, we have seen, whether it be Harold's auctions at his auction site, or Christie's, Sotheby's, Bonham's, other auctions, rare colored diamonds have been doing exceedingly well. In fact, some of the numbers that we've been hearing, we're looking at about, on some of the pinks, 14% price appreciation per year, 13% for others per year. So obviously in the environment that we're in, to have an alternative asset in your portfolio that can give you around 15% rate of return every year over the long term is something people need to take a look at. And that's really what's important in the world that we're in today, is having insurance policies based on geopolitical events or even some of the instability of politicians around the world. I know people feel the U.S. President Donald Trump is sort of an unstable personality in the decisions that he makes. Wake up one morning and you find out he's made some sort of decision that could adversely affect your portfolio. You need an anchor. You need something that's going to hold your portfolio down tight in the storm. And that's where we believe rare colored diamonds come into play. And that's why we encourage you to take a look at our 0.51 carat radiant cut fancy intense orange. As Harold was saying, it is very, very rare. And if you're looking to start your own diamond portfolio, this would be the one. But Harold, we congratulate you. 12 years ago, August of 2005, you started rarecoloreddiamonds.com, brought rarecoloreddiamonds.com and rare colored diamonds to our attention as an asset class that could be invested in. And yes, it has turned out to be a major winner for those that have invested along the way. And we believe, based on what you just talked about, pink diamonds and the Argyle mine shutting down, the best is yet to come if you take Harold's guidance and get into the diamonds that he knows are going to be the winners of the future, Harold.
You bet, Randy. Again, at this particular point, the investment world is certainly not for everybody because it's so confusing and so volatile and so risky. Owning alternative assets seems to be the way to go because at this particular point, when you look at the returns and how people do trading in stock markets and commodity markets and that type of thing, interest rates, down to 0.5% and soon going to go negative. All these things are happening, and most people at this point just don't have a clue what to do as far as investing goes because they just don't know. And the fact is that the markets don't make any sense, and nobody's making money in the retirement savings plan. So, again, what do you do about it? We have programs available for our Canadian clients that are based in U.S. dollars, Some of them pay over 25% a year and in U.S. dollars. Some will give you an income every single month for our clients that want to retire one day. We can help you with that. The diamond market is on fire. And that is an area, that most people would do well for the long term. Again, if you're putting away your retirement savings plans for the next 20, 30 years, I think you're going to do way better with a diamond than you will, trading in stocks and retirement funds and mutual funds type of thing. So, again, at this time, Randy, we can certainly offer our clients the right vehicles in which to invest. They're going to help them get to where they need to go financially, because again, if you're doing it on your own, the chances are you're not familiar with what your options are. So again, at this point, we're very excited about the foreseeable near future and being able to help our clients make money.
If you'd like to learn about the different programs Harold has in place, the diamond portfolio that he has tucked away in the vaults of rarecoloreddiamonds.com, those there for you to invest and start your own diamond portfolio. Speak with Harold at rarecoloreddiamonds.com. The call is free, 1-800-432-1022, 1-800-432-1022, rarecoloreddiamonds.com. Our featured diamond, a .51 carat, radiant cut, fancy, intense orange. And one of the stories that we have in our free weekly newsletter this week is about a retirement time bomb. And that is, governments around the world really do not have the money that they promised to put away for those that are going to be retiring. The money is not there. It's very important that we learn to take care of ourselves, and I hate to say it, almost treat the government money as a bonus, because going forward with interest rates the way they are, and even with the volatility of the markets the way they are, it could be very interesting for governments around the world to find ways to pay retirees the money that they're owed. And that's why I encourage you to read that article over the government retirement time bomb. And that's why we do our program. We're here. How can you invest today so you can retire tomorrow? That's why we do the radio show every week. We put our newsletters together. Harold does seminars online. If you'd like to learn more about what's happening in the world, cashless society, what does that mean to the average everyday person? The housing market in Vancouver and Toronto, which the IMF and Carson Block very concerned about. If the Canadian dollar becomes weaker, what does that mean for your portfolio? Negative interest rates around the world in some markets. Also, oil prices. Where will they be, and what will that mean for Canada? Bank bail-ins. Bill C-15. It was passed about a year ago, and that means bank bail-ins in Canada. How do you protect yourself, and what should you do if there ever was a bank bail-in in Canada? Speak with Harold. It's very hard to retire in the financial world we find ourselves in today. Everyone is worried about losing their retirement money due to another financial crash. Will we ever be able to retire? And not really if you're sitting in a GIC at 1%. We've talked about this many times before. The rule of 72. Divide your interest rate into 72. That's how long it takes your money to double. If you get 1%, 72 years is a long time to wait for your money to double. And let's be realistic, you're going to be in a position where it's going to be very difficult to retire. Harold has programs in place today where you can start making money and be in a position where you can retire down the road in a much better fashion. Find out more. Connect with Harold at 1-800-432-1022. rarecoloreddiamonds.com is the website. And Harold, now more than ever, as we see stories about retirement time bombs, which we've read in the past, but it's only increasing as time goes on because governments are not doing anything about it. And Illinois is a prime example, having their bonds rating cut to almost junk. And they owe different organizations, unions and teachers, and obviously fire and the police department, lots and lots of money when it comes to pensions that they do not have. It's critical that we take care of ourselves because going forward, to just rely on the government, no, Harold, I just feel nervous.
Well, we should be nervous because, again, things are not clear-cut as to how anybody's going to retire. When interest rates are at 0.5% or 1%, or obviously it doesn't matter how much money you have because, even if you have a couple million in cash sitting in the bank, you're not going to make any return on that money. Not putting it in the bank, and we obviously know that with Bill C-15 that keeping money in a Canadian bank is not an option over $100,000. So, again, at this particular point, there has to be other ways of being able to make money on your money, and we can help you with that. It would take you over 70 years to double your money in an interest rate market that's at 0.5%. My clients double their money every 4 years. So we can help you with that. Again, and that's in U.S. dollars, which right now is 25 to 30% higher than the Canadian dollar. And if the Canadian dollar continues to weaken, which we predict that it will, and the U.S. dollar gets stronger, which we predict that it will, then you're going to make even more money because the currency is the major reason for doing this. So what we've done is we've allowed our Canadian clients to basically partner with us on certain deals that we've been doing, and the results have been tremendous. Big returns, very, very little risk, and the fact is that everything is paid out in U.S. dollars just makes it a godsend for our clients at a time when a lot of people are suffering. Let's face it, in Alberta, with the low oil prices, with unemployment, with what happened up in Fort McMurray last year, we need some help. And the fact is that if your money isn't working for you, then you're working for your money, and we can help you again in that area. So as confusing as things are and dangerous as things are in the marketplace around the world right now, we are not risk takers. We don't leverage. We don't take unnecessary risks. And again, we deal in alternative assets, which are assets that you own outright, not paper. So again, I'm seeing a very bright future for my clients, but unfortunately, unless you pick up the phone, you're never going to know about it. And again, to sit there and think that you could actually retire with interest rates at 0.5% is just a fallacy. It's never, ever going to happen.
Connect with Harold at rarecoloreddiamonds.com, rarecoloreddiamonds.com, 1-800-432-1022, 1-800-432-1022. And one thing I've always said, we need to be teaching financial literacy in high schools. I remember that I got a little bit of it in high school, but I was lucky because I had an interest for some reason in investing. And I can tell you that it has served me well over the years being interested, but we work so hard for the money that we earn. You spend so many hours of the day out earning and working very hard, not around your family and friends. It's critical that you obviously profit and protect that money. And it's interesting to note teenagers everywhere don't understand money. An international study finds that only 12% of 15-year-olds have high financial literacy. It turns out that most young people aren't ready to be in charge of their own money. Only 12% scored at the highest level of financial literacy, and 22% scored below the baseline level of proficiency, according to the Organization for Economic Cooperation and Development. And they gave this test to students all over the world, including some provinces here in Canada. Educate yourself, educate your children. You work hard for your money. You want that money working hard for you. And obviously when you lose money in an investment, it hurts. Because let's face it, we're not making billions of dollars a year. We're making, an average everyday wage like everybody is. So it's very, very critical that the money that you do have, you really profit and protect. Harold, thank you for your knowledge. Another great show.
It's my pleasure, Randy. I wish everybody a wonderful weekend and a very profitable day.
And we can't stress enough, how do you invest today so you can retire tomorrow? Speak with Harold Siegel. Give him a call, 1-800-432-1022, 1-800-432-1022. Take a look at our featured diamond of the week, the 0.51 carat radiant cut, fancy intense orange, online at rarecoloreddiamonds.com, featured diamond of the week. That's it. Another edition of the World Financial Report on Radio with Harold Siegel and me, Randy Marshall. We will talk to you next week.